Hi everyone, today let's start off with sentiment, seasonality, as well as the calendars, the charts, as well as my results for the week and my thoughts going into next week. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So looking at fear and greed, it really has not moved for the last few weeks. You can see last week we were at 67 and now we are at 68, and you can see we're still in that greed. Extreme greed here on momentum, extreme greed on strength, extreme greed on breadth. I'm not sure if I fully agree with that one. Put call ratio, they say extreme greed. We'll take a look at that one later on the charts. Market volatility, definitely neutral, if not in greed. Safe haven demand, they say neutral. And then junk bond demand in fear, which is interesting here. We haven't seen junk bond demand in fear. The spread between junk bonds and investment grade bonds has been widening recently, and it'll be interesting to see if that continues over the next few weeks. Overall, really has not moved very much, as markets have not moved on a weekly basis very much from last week. Moving over to sentiment, however, this one is much different. Very interesting here. So the bulls haven't really moved, down about 1%, but the bears have come roaring back up to 27 from 19 the previous week, and the middle is starting to get squeezed. So not very many neutral players. It was basically at the historical average, and now they're starting to get squeezed, where the bulls are staying, but the bears are starting to come in a little bit more as the momentum for this rally continues to slow. Moving over to seasonality, I've showed this chart quite a few times here, but we are still looking for that rally basically from the 20th into the end of the month, so really strong end of year rally. But we're not quite there yet. We're currently at the 9th, so we're still in this sideways choppy price action. Might still be looking for a little bit of a dip low towards the end of this week. If it's going to happen, that is typically the low point of the month. And we're looking at the dashed line, so that's the area where you buy the dips and then hold into the end of year rally. Moving over to the seasonality calendar for this week. It is typically a bullish week. You can see it here. The 15th is typically bullish, more bullish than the rest of the days. But the interesting thing here as well is that this shows it is a triple witching day, and we'll look at the options on Max Pain later. And then I wanted to show one more chart here. This is the S&P's aggregate for 1949 to 2002, and really we need to be comparing to that pre-election midterm bear, which is what we got last year. So we are in that pre-election year, and it doesn't really matter that much. All of these have been really strong to the upside on an aggregate basis. But like I said, the one we need to pay attention to most is that green line, and it does show a kind of dip into that early December period like we saw on the other chart, and then a really strong rally into that end of year period. Moving over to the calendars, not much for Monday, just the 3 and the 10-year note auction. It'll be interesting to see how those come in, but not super impactful. And then looking at Tuesday, we do have CPI numbers. That's going to affect markets for sure. If the core year-over-year numbers start to come in a little bit more, that could be bullish for markets. But core has been quite sticky recently. Federal budget, always interesting to watch. See how much money they are injecting into the system with their borrowing. Then on Wednesday, we have PPI numbers, but the big thing for Wednesday is that FOMC statement. We are already at the next FOMC date, and that is Wednesday, to see if they do another hike. Current probabilities say they are going to pause, but they could surprise us. Definitely interesting. We'll see how that comes out. And then on Thursday, we have retail sales and core retail sales at 8:30. That will definitely affect markets. Fed balance sheet, always fun to watch. And then looking at Friday, we have global services PMI at 945. A couple of other economic indicators worth watching, but not a super impactful Friday. Moving over to Max Pain, we'll start with the zoomed out chart, and you can see just how many puts there are. Tons and tons and tons of puts. 285,000 at 400, 267,000 at 420. Obviously, these are all way out of the money, and I don't think we're going to get anywhere near those puts, but just understand that there are a ton of puts. That's why the put call ratio is so high here at 3.28. And really, in my opinion, that's just propping up markets. When you zoom in closer to that actual price action, you can see stock price at that 460 area, max pain at 441, which could give you a little bit of downside potential. But right around the money, there's very few options relative to the numbers that we were seeing. That first really strong strike is 420, which is $40 lower. Obviously, I don't expect to get anywhere near that region, but it wouldn't shock me if we did get a little bit closer, maybe 450. That's kind of the first decent put strike. You could argue maybe 457, but that's a little bit close to the money, I would say. Between 450 and 462 makes sense. So a little bit of upside potential, but honestly leading a little bit more to the bear side in terms of max pain for this week. Remember, it is a witching week, so total options massive here at almost 4.7 million just on the SPY. Moving over to the charts, starting off with the S&Ps here on the weekly chart, you can see we did have a slightly bullish week, 0.21%. Momentum continues to tick higher, but really what I want to highlight here is this decline in RSI, much lower RSI read versus price, which is at the same level here. You can see we're at that same peak from 24 July, right at those wick highs. RSI showing weakness, momentum still bullish, but clear divergence. If we are going to maintain this rally, we need to see price overthrow this previous high and then RSI get to at least the same level, if not overthrow it, to continue to show on the technicals that this is a bullish move that can be maintained. And then looking at the EMAs here, you can see the 9 and 21 getting very close to crossing. They are close together there. And then the 144 and 55 EMAs look like they're about to cross in the next week as well. So overall, we're still seeing bullish indicators, but that divergence is a little bit concerning. Moving over to the daily chart on the SPY, it is worth noting that the SPY did get above that wick high from the 27 July candle. So this is actually a breakout on the SPY versus the SPX, which is still at that level. Definitely interesting to see that difference between the two charts. We were watching this kind of flag setup, and then we had that big bull candle on Friday. So overall, this still looks bullish. Next level for me, 463.70. We were able to hold that 9 EMA almost throughout this little consolidation. Now we're rolling higher. It does seem like we're going to accelerate into next week. Even if in the medium time frames, we do end up coming back down from this rally. And just to show that flag setup a little bit closer, you can see that choppy motion, big rally on Friday, next level there, and then trend would be up around 465.40. That would be well above all of those options that we talked about for max pain. So I don't necessarily think that we're going to finish in that level, but it does mean that we could rally up into this zone. And even if we were to break down from here, those first options to the downside were around 450, which only gives you about 10 points to the downside, or around 2% of downward price action if we were to get that kind of move. Moving over to the NASDAQ on the weekly chart, you can see we did break above this July high, and we are into this consolidation that marked the all-time high in November and December of 21. The top of that was up around 16,700. If this current trend line breaks, that's basically where we would be looking for our next price target. On these two mid-center lines that I have, this trend is pretty choppy and hard to actually build. But this is what I'm looking at right now, right in this midline, looking for a break to that upside if it's going to get it. We haven't seen that breakout yet. And then looking at RSI, same as the SPX, we have clear divergence, lower RSI read with higher price. Will price follow through with RSI coming into overbought conditions to break this? That is something that I am paying attention to. If we kind of top out here, then I would expect this to break much lower. Then we should at least be looking for a test of the 21-week moving average, which is all the way down at 15,200. Moving over to the daily chart, this does look like a double top in the shorter time frames. You can see we are still above this July high here, but the high for this rally is currently on 29 November, and we are very close to that level. But look at the RSI. We have lower RSI on the daily chart as well, with price getting into that same range. So it does seem like we're potentially going to see this roll over. Tech has been lagging, and it doesn't look nearly as strong as the SPY does right now. And then looking at that on the shorter time frame, you can still see it is bullish momentum, and RSI still looks okay here on the 4-hour chart, but you can still see that same divergence. RSI was hitting its highs on these wicks, and so far we are at higher price action with RSI not nearly as strong. We are at the top of this shorter term uptrend, and if we reject from here early next week, that could be quite bearish. But if we see this break out and we break this divergence, then we should see that end of year rally that we saw on the seasonality charts. Moving over to the Russell, you can see on the weekly chart, we have been in this choppy range for a long time. We're coming off of a dip that we tested the same low here from June of 22, October of 22, and now we're rallying potentially up to the highs that we've tested 3 times now. That would be the 198.75 level. This particular rally has been a little bit aggressive. You can see we've had pretty similar moves like this, pulled back slightly and then rallied through. We haven't really seen that yet. We did have that one pullback week on 6 November. But the question is, what happens now? Are we going to pull back a little bit, retest that 9 EMA, and then rally through up to those highs? Momentum still bullish, RSI still bullish. Everything still looks clean to the upside on the Russell. Moving over to the daily chart, you can see we did have that same dip low, rallied up. It does look a little bit more choppy with those 4 down days. Tested the 21 and then rallied up. And then you can see that same consolidation drift upwards break. And then we kind of flagged down similar to what we saw on the SPY. And now we're breaking out here. And with that flag, I do have the price target up around 193.50 or so, right in this range. But we are almost overbought. No divergence like we were seeing on the other charts. We are continuing to make new highs. But we don't see divergence the same way we're seeing on the other charts. You can see we did make a high for RSI on the 4 December candle. We are basically at that same closing high with a little bit lower RSI, but based on this chart pattern, I would expect it to go higher. And you can see it here. I have my price target indicator basically from that dip low into the top of the flag. Then you just take that from the breakout into that same range. Up around 193.50 is the price target, and it does make sense. This is a pretty clean breakout, pretty clean flag, and I would expect that move. Everything looks bullish here on the Russell, in my opinion. Moving over to the Dow has been on a massive run. You can see 1, 2, 3, 4, 5, 6 candles in a row of bullish movement, bullish momentum, bullish RSI. Everything still looks very clean here. We are at 52-week highs, and we are right at these previous highs going back to December of 21, almost at all-time highs here for the Dow. And at this point, it seems like we are going to test those levels, at least to 365.11, which is my next level for upside, and then above that, 369.50, which is the all-time high. It does seem like we're headed in that direction on the weekly chart. Moving over to the daily chart, you can see this massive rally that we were just looking at, the break above the previous high. And then we've had a little bit of a consolidation, 4 days of sideways action in a row. And then we had that bullish move on Friday. Momentum fading, RSI fading a little bit. We can see just a very slight divergence. And we did have massive volume on those last 2 up candles on the 30th and 1st of December. But in terms of trading range, looking for 365, 362.18 is support, and then 369.50 just above that level. And I still expect it to get into that range. Moving over to the equal weights. Again, bullish movement. We're above 149.82, and the next resistance realistically would be that 155.79 level. You can see we tested that area here on 30 January, and then we tested it here on 24 July in terms of candles on this weekly chart. And you can see the neckline is that 149 level, and we are right at the high from last week's candle as well. Bullish momentum, RSI still looks okay, and I do think we're going to get above that level and rally up to the next one at 153.19. Moving over to the daily chart, it does look a little bit less clean. I was kind of watching this as a rising wedge here slightly, but then we had that massive break on the 1 December candle. Since then, we've back tested those levels and then rallied up, so still looks okay. We're right in this volume zone here on the daily. The top of the next volume is that 153.19 level, and you can see there's a little bit of volume in this next area as well at this previous consolidation. So overall, still looks okay to the upside with just a little bit of divergence, same as we've seen on most of the daily charts. Moving over to the ratios, starting off with SPY Russell and NASDAQ SPY. Russell has been outperforming. You can see over the last few weeks, this ratio has pulled back pretty substantially. Tested that 21 EMA. The question is what happens now. We did see bearish momentum for the first time in a while, going all the way back to the 5 September week. And this RSI chart does look pretty clean to the downside. Clearly broke above it, got into overbought conditions, clearly broke below it. Still need to see it get below the 50 line, and I do think that that is possible. But we're still above it right now. As long as that 21 holds, then we would see SPY outperformance potentially. But this ratio is pretty extended to the upside. We've talked about it many times. I do think the Russell is going to outperform a little bit more over the first quarter of next year. And looking at the SPY NASDAQ, you can see this very slow grind higher. NASDAQ slightly outperforming the SPY, but I don't think that that is going to continue over the next week or so. The daily chart just looks much weaker on the NASDAQ versus the SPY or the Russell. Moving over to SPY versus the M2 money supply, you can see we are at that critical level at the previous all-time high right now. This isn't the all-time high for the ratio, but this is the all-time high for the stock market. We are right at that level once again. Based on everything we've seen, it looks like we're going to break out from there. The next level here is 24.49. There's a lot of room here. We don't typically stay above this 22.05 level for very long. Only time we've done it for any length of time is the dot-com bubble. And obviously that did not pan out for the investor. Pretty good for the trader, pretty good time to be a trader. But in terms of investing above this 22.05 ratio, it's not great. So like I said, looking for this breakout above these all-time highs and above this previous wick high. Want to see it get above that 22.29 level. We're just below it. But if this tops out again and we start to see this pullback again from this very critical level, this could be a zone where we see a substantial change of trend, just like we've seen the last several times we've been in this area. Moving over to Apple and Tesla. Apple had another bullish week, 2.34%. This came on the back of news that their holiday earnings are going to be very good. And then it shot up once again. It was kind of losing momentum, but it did end up holding that 189.96 level and then shot up here almost to all-time highs, all-time high level, sitting at 196.79. It does seem like we're going to get there. And then if we do get a break, there is a lot of room to the upside. Obviously, we'll be in price discovery, so we'll see how that plays out. But it does seem like Apple is going to make a new all-time high this week. And then looking at Tesla, it had been in this kind of downward flag, but it came up a little bit short from that bottom trend line like we tested here on the 14 August week. Held at the 200, held in this consolidation for 4 weeks now on a closing basis, and honestly it does seem like it's going to break higher at this point. Hasn't done it yet, but momentum ticking bullish, RSI ticking bullish. It does seem stronger here than it has recently, and it continues to hold this consolidation. Next level for me would be 255.44. or about $12 of upside. Moving over to NVIDIA and Microsoft. NVIDIA had a strong week, 1.58% coming off of that 21 EMA. Momentum bearish, which is interesting. We've been consolidating in the same range for many weeks now, going all the way back to June of this year. Broke into this range, topped out here in August, tested that level again in November and pulled back. We are holding at a higher low right now versus this previous low. So if this holds and continues, then you would expect a new higher high here on NVIDIA. They did have a little bit of competition with AMD, and AMD seems to be pulling some of their market share right now, but obviously this is a very strong stock, and if it's going to rally, it should do it now. Microsoft, on the other hand, did get a step down on momentum for the first time in a couple of weeks, and this does look a little bit weaker on the shorter time frame. So let's go ahead and throw these down to the daily charts, and you can see that here. So that breakdown on Microsoft consolidation, 9 EMA test, and I would expect that to break down a little bit further. Momentum on the daily chart, again, less clean. So we got a step towards bullish, which is interesting on that Friday candle. If it breaks above the 9 EMA, then you could look for a test of that 378.77 level, and that might break that weekly structure. And then looking at NVIDIA, obviously a bullish move, pulled back, 55 EMA, held that level, rallied through. Need to see it get above that 21 on the daily chart at 479.76, and then 487.98 would be your next level to the upside. Moving over to staples and discretionaries, staples had a negative week, 1.18% to the downside, still bullish momentum. RSI touched that 50 line last week, broke down from there this week, and we're pulling back from that 21 EMA. As long as this 200 holds, that would be a nice level at 69.88. Otherwise, if that breaks, then you're looking back down at this 68.91 level. The 9 EMA and VWAP sitting in that same zone, but that could be a nice move. So we rally up, test the 21, pull back to the zone, hold a higher low, and then rally through. That could be a good little trade there on staples if it turns out that way. And then looking at discretionaries, this continues to be on a run. And if Tesla breaks out like it does look like it will, then we should expect discretionaries to be breaking out to some new 52-week highs, which would be up around 180.10, taking out this high here from July, as well as the high here in August of 22. Moving over to transports and industrials, both of these had a bullish week. Transports did start to show a little bit of weakness here on this candle. You can see that wick, slight rejection from this break here, going back to the high from the 14 August candle. Doesn't mean that it's going to stop. Still bullish momentum, still bullish RSI. Everything still looks pretty clean here. We've had a lot of weeks in a row of bullish movement. Does seem like we're going to get up to this trend at 258.71, which gives you about $5 more or so of upside. But if we do pull back, this would be a wick high and a potential for a rejection. So we either need to see that follow through, or if we get that confirmation candle down, then we could be looking at the end of this run on IYT, and then looking at industrials getting very close to all-time highs here. 110.27 is that level, getting very close to that level. Bullish momentum, RSI still looks clean to the upside. And this is really what's starting to drive these runs. Tech is lagging right now, industrials looking good, discretionaries looks good, and so does financials. Moving over to breadth on the 20 and 50-day averages, you can see the 20-day average actually had a really big bear week, so 14% down, coming off of this critical level around this 86.50 level. Most times when we come into this zone, we do end up breaking down from here. Doesn't mean that it happens right away. You can see we got here on that 24 October week, chopped here for several weeks in a row before having that big move down. So this could just be an initial week like that. We pull back, chop in this zone, and then break down. But understand that this is an area where we tend to pull back. Momentum is stepping down just like we saw here previously. And very rarely do we see a push up to that 98 level. We did see that here in April of 20, but most times this 86.53 level is what we see, and we are breaking down at least slightly from that level now. And then looking at the 50-day average, you can see we are in a pretty critical zone. We do sometimes see a move up to that 92.25 level. We've seen it a few times, but this zone right here is critical already at 92.10. Again, doesn't mean that we're going to flip immediately, but understand that the amount of upside potential is starting to dwindle, at least a little bit in my opinion. Moving over to yields just for a moment, you can see yields did perk up on that Friday session for both of these. Momentum ticking back towards bullish, RSI breaking out above the SMA on both of these. The unemployment data was pretty strong, and that did send yields higher, and I do think this is going to have a little bit more legs to the upside over the next week or so. Moving over to the put call ratio, this is not really giving us much information. We're basically in this mid-range. You can see we're slowly chopping lower and lower, but we haven't hit those overbought conditions yet, in my opinion. You can see typically when we get into this 0.5 range on the overall put call ratio, that is typically when we start to see tops. We get in that range occasionally. Sometimes we get a little bit closer like we did on this candle on 15 November before we pulled all the way back to this kind of trend line that we've developed. And then once we start to get into this 1.4, even up to that 2 level on the put side, that is typically the end of the down move. So definitely worth watching, not giving a ton of information right now. Moving over to the dollar, we talked about this in the Friday video. You can see the daily chart is showing a little bit of strength, shorter time frames showing a little bit of strength. That should be bearish for equities, but I do want to throw up the weekly chart here just for a moment. You can see we did have that pullback, tested that 103 area, and then we had a strong up candle. If we get a follow through on that, we should see momentum tick back towards bullish. Need to see it get above that 9 EMA, could get into that zone and break down. That would be up around 104.8. So then we would see a move down, lower high, and then we could see a continuation down into the end of the year, which would facilitate that Santa Claus rally that I talked about. Moving over to bonds, you can see J&K hitting that 93 level once again, just like we did last week. Inside candle on the weekly chart, momentum still bullish, RSI still bullish, but this is an area where we do start to see a little bit of pullbacks. We've seen it several times over the last couple of years, over the last year or so. And if we do pull back, we could see a move back down into this 91.50 or all the way down to 91. We are above all the short-term EMAs right now, so it does seem like bonds are starting to show a little bit more signs of life than they have recently. And then looking at TLT, very similar thesis. We did test this downtrend line almost to the penny, and you can see we are testing this low here from October of 22. That's obviously going to be a critical level. Might see a little bit of pullbacks. I don't really think it's going to fall too far. I do think the trend is starting to shift here a little bit on bonds, but this has been a pretty strong rally. Some pullbacks are going to happen. I would expect those to be bought up. The question is, how far are we going to fall before that happens? And this realistically could go all the way back down to between 88.50 and 90. Hold that level if it's going to, and then rally through. Again, strong volume here on TLT, and even some decent volume here on J&K. Does seem like larger institutions are starting to build some positions in bonds for the longer term hold. Finishing up here with the VIX, you can see we've consolidated for 2 weeks in a row. At this point, I think we're going to consolidate in this area for a bit now. You can see we've done this before here in July of 18, as well as November of 19. Multiple weeks of consolidation in this level, similar to what we saw at a different level here in June, July of 21. It is worth noting that we did break below all of these wick lows down to 12.35. Not a lot of fear in markets right now, which does mean markets are probably headed higher over the next week or two. Moving over to my accounts, you can see I did okay on the week. I was down when I shouldn't have been. I was a little bit bearish going into one of those days where we ended up perking up pretty strong. I was buying into that NASDAQ down move a little bit too heavily, and then we ended up perking up from there, which is a bit of a bummer. Right now, though, you can see I am positioned bullish. I have a covered call here on the IWM out to 183 for $5 credit, so I have a little bit of room over the next week for some upside there, and I have no issues rolling this out in time if I have to do that as well. And then Qs, I do have 2 covered calls, 200 shares out to 390 for $8 credit. That is for 27 days from now. I don't necessarily know if I'm going to hold it for that whole time, but we'll see how it plays out. It does give me some pretty decent upside potential with a good amount of protection. And then I have some shorter time frame puts and calls, 391s for 87 cents, and then some 389s for 4 days from now with $4.76. I'll probably continue to try to roll this up and out to give myself some opportunity for some profits there while I continue to collect on the put side. Overall, bullish into next week, but still monitoring for those signs of some downside risk. Let me know down in the comments section what you think of the seasonality. What are we going to get into the end of the year? And will we see that pullback into the witching event for the end of this week? And the FOMC, don't forget, what's the FOMC going to say? And will that be a positive or negative for markets? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.